Let's just hope it doesn't tank out on them. All right. We are live. Thank you. Uh is it Errol?
Errol.
I never say Errol.
No, I
I
know
never
people. The anchor that I typically give folks is, if you, but even that's a generational reference, is
I
the
know
actor
you said it's the
Errol
last time.
Flynn. Yeah, like,
Man.
if you're older, most people like, oh, okay, yeah. But like, I feel like if you're under 40, you're like,
Yeah.
'cause I think the last time I even saw Errol Flynn on a screen, it was black and white. Like,
Yeah, you
there's
might
not
want
too
you
many
might not want
Errols.
to use that reference point there.
Yeah, that's
Not
the
a,
most recent. Like, I feel like there's not too many arrows that are, I guess, notable, at
oh,
least on the American side, where it's like, oh yeah. I remember. Like,
yeah,
that's all I got.
there's not too many other mnemonic devices out there, so
Yeah,
you figure
yeah.
that out. Well, just for point of reference, the audience may not know who you are. Just briefly introduce yourself and maybe briefly state what's currently going on in your life. Like, what season are you in your life right now? Let's come back to that question.
Ooh, that's a good question. So I'll start with the easy stuff. As you stated, I'm Errol Devon.
Yeah.
I am a fiduciary and trust professional. So that's what I kind of do in my real life, my day to day. Been doing that
Hmm.
for a little over 2 decades
Oh,
now, and because what that kind of means, other than the kind of labels, is really in practice, we put together asset protection systems,
okay.
which is very different than estate planning. Uh, if you had to put me in a bucket, that would be the bucket, is estate planning
Okay.
as an industry, as a category. In practice and practitioner, I don't consider myself an estate planner because that's not really what we do. The distinction between estate planning, um, certainly, if you ask me and folks that kind of sit on my side of the field, is that estate planners are paper pushers. They push documents, they put together death plans, which are important. So I don't want to diminish their utility, meaning that whatever assets that you've accumulated in your life,
Mhm.
if you would like to ensure that those assets get passed down, transferred to your intended either loved ones or maybe organizations, initiatives that are near and dear to your heart, then having such a plan to be able to pass that down without the interference of the state, then having an estate plan is great for that purpose.
Mhm.
However, the difference between estate planning and asset protection architecture is that we structure systems that protect your assets while you're living. Right.
Yeah.
So it's not just once you've made that transition in life and everyone else gets to benefit from kind of your lifetime decisions and what you've accumulated,
Mhm.
but it addresses the question, well, what if we keep living? What if we got another 30, 40 years walking planet
Yeah.
Earth? Then what? Right.
Yeah.
And
Yeah.
my specific niche is asset protection against government overreach. And so that's very different than
Okay.
simply avoiding probate. Most folks, when we talk about interference from the state, that is probate. So probate, for anyone that's not aware, because most folks kind of think, oh, is it, I got to go to court. Like, yes, that's true, but
Mhm.
what probate is in reality is state level asset extraction. Because
Okay.
what probate does, it prioritizes the state first, then it
Mhm.
prioritizes the needs of your creditors second, and then whatever is remaining, if anything is remaining, after those first two priorities are settled, that is what is left for your beneficiaries.
Okay.
And quite often during the court dates, etc., and the fees and the cost, which is what a lot of folks focus on, but that's not the real cost of probate, not even by a long shot.
Okay.
If anyone that knows me, have been in any of my master classes, know that I say probate, and I know I'm on a family friendly show, but I typically say screws up families
Okay.
generationally.
Okay.
But I just say it in a little bit more colorful language.
Okay. So let,
But
let me
go ahead.
let me get an understanding a little bit. Asset protection systems, you're mainly talking about trusts.
So not just trust.
Okay.
They may be trust based, but it
Okay.
is a bit of a misnomer because a trust is simply a document, right?
Hmm.
It is documents don't protect families. Systems do. Because
Okay.
when we're talking about specifically the niche of essentially how do I insulate what we've built as a family, irrespective of the monetary or the notional value
Hmm.
of what has been built. How do I protect it from not just credit card company or
Hmm.
mortgage lender? How do I protect it from a state actor? How do I protect it from a federal actor? Meaning, how do I protect it from Medicaid coming in and
Hmm.
stripping us of what we have? That's a state
Okay.
actor. How do I protect it from the IRS? How do I protect it from a DHS? How do I protect it from an FBI? How do I protect it from a DEA, an ATF? How do I protect it from an ever changing landscape of statutory, regulatory shifts within policy? That's asset protection.
Yeah,
Uh,
it seems like huge explanation here. Put it in layman's terms for me. In a nutshell,
how do I protect it
one sentence.
from, yeah, how do I protect it from government agencies and actors coming to extract what I have built?
Okay. Um,
That's what true asset protection is.
okay.
And yes, it may be trust based, but
Hmm.
the asset protection piece is not the document. What it is understanding how each of these pieces, meaning how does the regulatory environment from the state impact not only the trust, but the assets themselves, any regulatory changes. And so it really comes down to three things. An asset protection needs to be audit proof, it needs to be court proof, and it needs to be adaptable. Meaning,
So when you talk about asset protection system, is this a contract? Like I'm still trying to frame it. Call me, I'm I'm a simpleton. I like to think I'm smart, but I'm not smart. You know what I mean?
sure.
So
So I'll give you, and
so
I'll give a,
give me something tangible. If you gave me the protection system, is that a document? Is that a system on how I should proceed forward during and after my death, or is it all this as it pertains to a trust document? Like what am I what is the tangible item here with regards to it? Yeah.
so it may start with a trust, right?
Okay.
Being that it is a trust based system, but the trust is just the document. So whether it includes
Okay.
essentially other, let's call them products, because a trust, you can productize that, right? So it's
Okay.
like, let's say, like the trust, let's say some folks may have companies, LLCs, C
Uh-huh.
corps.
Okay.
One of the more common things that's circulating around the internet, right, is, well, let me have my trust own my holding company, and then the holding company has these three subsidiary companies with this C corp, and then and like these are products at the end of
Yes.
the day, right?
Yes.
However, simply because you have products does not mean you have asset protection. Because
Yeah.
the asset protection
Mm.
piece, like what you have are just products. Do you know how those products work? Do you understand the administration? Do you understand the regulatory environment? The knowledge that you need to have in order to operate the policies that allow those products to exist, to
Hmm.
allow them to function, and more importantly, the relational between you and the state that governs the existence of those products.
You,
That's
you,
really asset protection. So in other words, it
yeah.
is the intangible things
Okay.
that is not just, oh, here's a trust. And because trust get pierced all day, every single day. There's
Okay.
77 variations of trust. The two buckets that most folks are familiar with are revocable or
Hmm.
revocable trust uh, and irrevocable trust. These are just simply categories. You have about 24 variations of revocable trust. Examples of that: maybe living trust, inter vivos trust, pot trust, Totten trust,
Okay.
family trust. All these are variations of revocable trust. Whereas you have on the other side irrevocable trust, and you have variations of that. So whether they're slats or grats or IDGTs or special needs trust or charitable trust, these are all variations of irrevocable trust, but it's about 4.5 dozen variations of those, right?
And you help the individual select. I know I'm jumping in here.
Sure,
Just bear with me.
sure,
I'm just
sure.
trying to. You help individuals select the right type of trust product or trust that's going to meet their needs. Right? There's not a generic
Correct.
trust out there. There's all types of
Correct.
trust.
There is
You
no
know.
one size fits all, because
Okay.
if your goal, right, not everybody's goal is to have asset protection. Like if your goal is like, hey, I just want to make sure that, we don't go through probate. Like
Hmm.
any number of revocable trusts would do, because all revocable trusts do the exact same thing to the exact same measure. Right? There's
Hmm.
almost no purpose for there to be variations of revocable trust, because they all do the exact same thing. Like, Inter vivos doesn't do anything better or worse than a family trust. Does the exact same thing. It just simply avoids probate. No more, no less. That's it. If we're looking for asset protection, maybe some tax optimization, maybe some existence within perpetuity,
Hmm.
uh, to not only avoid probate, but to keep it out of the hands of maybe creditors, maybe even other family members, right? Then having some degree of asset protection will suffice.
Hmm.
But for those folks that understand, my family isn't the biggest threat. Probate may not even be the biggest threat. It's all the other things that we all intersect with, and maybe we just don't understand that we intersect with a system.
Hmm.
In other words, what does IRS and the Board of Education have to do with Medicaid? Everything.
Hmm.
What does so? Although we all intersect with each of these, what we believe in silos,
Hmm.
the distinction is understanding that what you are contending with is a unified system of asset extraction, whether it's called eminent domain, whether
Hmm.
it is whether it is called probate, whether it is called a look back period, whether
Hmm.
it's all of this, whether it is called civil asset forfeiture.
Hmm.
All of these are ways and means that state and federal actors have the
Hmm.
ability to step into a private citizen's life
Hmm.
and legally extract house, car, retirement, savings,
Hmm.
college funds, every single dime from you with very little recourse for you to do anything about it. Because either you have the assets or the resources to be able to fight back, or you have a system in place that insulates, so that if you do find yourself a target of any one of these systems, then you're already protected. At least your assets are already protected. And so
Okay.
that's, hopefully that makes a little bit more sense. So not
It
everyone
does.
needs what
Okay.
we do, right?
You talk about trust and you talk about products. When you frame products, you talk about LLC corporations. I'm assuming real estate. Um, that's what you're referring to when you say products, right? Is it's the things that are attached to the trust. What are some
No, the
examples?
trust
What is
itself would be a product. An
the trust that?
LLC would be a product. Like
Okay,
the like
this is so way above my pay grade here.
no,
Um,
maybe I'm not doing a great job of explaining
well,
my analogy, but go ahead.
no, well, let's just break it down a little bit because you help people build systems, but that system entails what the system is surrounding the trust, right? The trust is at the center of how you help individuals protect their assets, correct?
So yes, I would say in most cases.
in most cases? When is the
Yep.
trust? What is a trust? So what would be used outside of a trust in order to protect assets that you would help individuals build systems around? Give me an example.
So we do have um, some proprietary, essentially products that we build. Right?
Okay.
These are essentially legal products that we
Okay.
structure, that allow for folks to be able to protect their assets in concert with the trust. But that would be an example where, depending on what the concern is for that particular individual. So just I'll give a quick walkthrough, right? Let's say a client comes to us and they have a concern about, they have some land. They have, let's call it, something fairly modest, 50 acres of land. Plus they have, let's say a few structures on that land, home, barn, maybe they have some, crops, uh, maybe some cattle, etc. And but they're sitting in, let's call it Virginia, for example, right?
Mhm.
Well, why Virginia? Because Virginia has is the second state with the highest AI data centers
Mhm.
that are being proposed for to take over land. Well, why would
Mhm.
that be a concern? Well, for several reasons. Because as of July of last year, the White House made their objective very clear. All right, that they put out a white paper called AI, America's AI Action Plan,
Mhm.
and as a result of that, they have made their objective very clear that they are going to essentially manufacture uh, data centers across the country, almost irrespective of the constituents' input, put it that way. We see that happening in reality because very few communities that have come out, and a lot of communities across the country have come out in droves to demand that their local elected officials do not bring data centers in. And yet, we continue to see data centers
Mhm.
getting approval.
Mhm.
So there's a disconnect between not only the constituents and taxpayers, but their
Mhm.
local representatives. So not just that disconnect between federal and local,
Mhm.
but there's a disconnect happening on the ground. Why is that
Mhm.
important given this individual that may have 50 acres? Well, because the thing that he has to be concerned about is, despite his voice saying, no, I absolutely do not agree with a data center either near or on my land, but also the concern for sustainability. What's going to happen to my crops? Maybe I have
Mhm.
concerns about the pollution of environmental factors that's going to impact my business as a farmer, my ability to grow crops, my ability to provide clean water sources to my cattle, etc.
Mhm.
Um, so, how do I protect that from such overreach? Because as we presently see, along with a few executive order, if I, off the top of my head, I believe it's 14179. But there are two executive orders that allow for the EPA to fast track uh, essentially eminent domain. Their job is to
Okay.
now identify land that
Mm.
can be easily scooped up. And if we look at the past 6 months, the government has actually been overpaying. An example of that would be a family out in Kentucky. In fact, farmers been there
Mm.
for 100 years. I think the present generation, the mother is about in her 80s. The
Mhm.
eldest daughter is in her, I think, 40s or 50s. Don't quote me on that. She may be a little bit older. But the land, cattle, everything, the whole ball of wax is only worth about like 1.7, 1.8 million. The
Mhm.
government offered them a check for $26 million for that land,
Mhm.
and they turned it down. I said no, because we understand that at some point some of us have to take a stand and say no if we believe that there is a different future that we want to see, right, than what the federal government is saying this is the future that they want to see. And
Mm,
so eventually, that local government may open up the door to the federal government to be able to take that land through eminent
mhm,
domain, right? And now it is legally acceptable for the government to kind of steamroll where eminent domain you're typically offered kind of a market rate, but now you don't really have a say so on what that market rate is. They can offer you pennies on the dollar and
mm,
or even overpay, but at the end of the day, you don't have your land. And for some folks, their land is more important than the money.
mm,
Uh and so for that particular person, putting their putting their, you know, their land in a trust alone is not enough.
okay.
Is not enough. Not even close to being enough. Whether it's a land trust, whether it's some other variation of an irrevocable trust, it's not enough. There needs to be layers of asset protection. So whether it is a land trust, and in this particular example, whether it's a land trust along with a conservation easement, or maybe we start with the conservation easement. What is a
Mm,
conservation easement? It's not a trust, but it
okay.
is a protected entity that ensures the land or the environment on that land. So let's say you have 100 or 100 acres, 70 of those acres or 70%
Mm,
is specifically for maybe some specific type of crop that is endangered. And so that
mm,
land has to stay within a particular environment, in other words, that cannot be thwarted. Otherwise, the endangered species that is on that land would ultimately go extinct, right? Or contribute to the extinction of that species. And so a conservation easement ensures that the land that is identified that
mhm,
houses either endangered species, whether it's an actual species or a crop, etc. But the point remains is that that conservation easement is there to ensure that that particular, you know, plot of land within the overall land is shielded. Uh, so we could start with the conservation easement as an example instead of the trust, but then backing that conservation easement into a trust, whether it's a land trust or otherwise. But it's also not enough simply for the land trust because can a land trust be challenged all day long? Can a
okay.
land trust end up in court all day long? Can
So,
a
okay.
conservation easement be challenged as well? Yes. So that's why it's not enough simply to have the structures. You can think of the structures, land trust, conservation easement. It's like, oh, well, I'll put it in the LLC. And like, do LLCs not get sued? Do LLCs not go to court? Do
Yeah.
LLCs not get audited? Do C corps and not go through the same thing? So, in other words, this fanciful idea that like a lot of folks kind of push is like the structures, like, oh, the structures is the asset protection, is not.
Okay.
How the
No,
structures interconnect with existing policy, how they connect with statutory interpretation, treatment, how they connect with the regulatory environment, that is the asset protection.
okay. So
If
when you set up these asset protection systems,
mm,
does that bulletproof you? Can you guarantee without 100% that that person's assets will be protected or whatever they have, whatever they're trying to
nothing
um
is 100% life. I can't guarantee that, you'll wake up tomorrow, right?
hello.
So
Okay.
it's like, yeah,
Right.
but I understand the sentiment is a do
Yeah.
we
So
give
when we talk about
ourselves
protection, there's
the
limitations to it.
best
Right.
correct, just like with anything in life, right? And if anybody tells you, oh, 100%, then, run because
Okay.
they're full of BS. Nothing is 100%. Nothing.
with this type
Now,
of
can
stuff
we
here,
increase the
okay.
likelihood though, right? Like can we increase our chances, right?
Mhm.
That what we've put in place will remain protected. And more so, do we have legs to stand on to be able to stand and fight and not just me, because maybe my particular environment is fine, but what about 3 generations from now? What
Okay,
about
so
4 generations from now? You
let
know?
me advan let me advance the question a little bit. So let's say you got
Yep.
the asset protection system.
Hmm.
Um, somebody comes and tries to breach the veil of that asset of that system,
Sure.
right? In order
Hmm.
to acquire something.
Yep.
Um, the system that I create doesn't protect it in and of itself. Like at that point, I'm going to have to hire a lawyer in order to go into the court system and defend what I put in place. Correct?
Correct. Yep. It is. So, what you have done, what these systems do, is it narrows the challenges, it narrows the scope of the challenges, it shuts the leaky holes, right?
Hmm.
If I have a boat, it's plugging those leaky holes. And so, like, simply because I'm on a boat doesn't mean that the boat will never tip over. No, right? But should I be on a boat if I'm sitting in water versus, should I be on a plank of wood? Like, which has the higher chance of survival? That plank
Hmm.
of wood or the boat? And then there's
Yeah.
degrees to the boat, right? Like, do I have a canoe? Am I in a kayak? If I'm in a kayak or a canoe, am I better off than the person that's sitting on a plank of wood? Absolutely. But
Mhm.
can I still easily flip over all day long, right?
Yeah. Okay.
Versus the person that has a 300-foot yacht,
Hmm. Right.
versus the one that's sitting in a cruise ship.
Right.
Right. Like, all
Right.
of us still are subject to the whims of the waves, but
You know.
can we
Mhm.
withstand the waves, right?
Okay.
And the better insulated, right? And that's kind of how you can think of asset protection. It's a spectrum. So if I have the only thing I have is a revocable trust,
Mhm.
I'm in a canoe, right? So I have some, I got a little bit of shielding from probate, all right? Uh, but can my assets still be pierced? Can they still be extracted? Can my beneficiaries still have demands put at them all day long? So that canoe is going to flip over fairly easily
Okay.
versus the person that has all of their assets within some variation of irrevocable trust.
Okay.
Then instead of a canoe, maybe we've upgraded to you know a dinghy, right? Something a little bit bigger than a canoe. Um, but we're still subject to the ebb and flow of the waves, right?
Okay.
Uh, so hopefully that makes
Yeah.
sense. So the higher the asset protection, the bigger our boat
Okay. Fair
gets.
enough. You how it's a couple other questions, and I'm gonna shift the momentum here a little bit.
Mhm.
Um, uh, how what if I'm a young person, um, how soon should I start considering asset protection?
I would say as soon as you have some assets, right?
Hello.
I
Right.
wouldn't say where where things. No, it's a fair question though, because I actually get that question a lot. So I'm not even being like flippant when I'm
No,
when
no,
I'm
no.
answering that. Because I have a lot of young folks that are just starting careers. They're just doing like well in life, and obviously well is a comparative or relational term, right? So whatever you consider well,
Yes.
and normally it's. Oh, go ahead. Did you say
No,
something,
I
Larry?
thought the signal was chopping up. You keep going.
Oh, okay. And
I thought
normally
the
is
signal was chopping up. Keep going.
okay, no worries. And normally, well is like, hey, I can afford to pay all my bills, and I have, some left over, right? I got some money left over every single month. I'm not struggling anymore. So whatever that dollar amount is,
Yeah.
right? And now, so whether you're in your 20s, whether you're in your 30s, and people begin to think like, oh, I need to shield something. Like, I want to make sure that my first step is the best step. And so they're
Mhm.
like, well, maybe I should have all of these things now in place.
Right.
So as I continue to build, then I already have them in place and I don't have to essentially retrofit. And
Mhm.
so, for the young person that's sitting, or just the person, whether you're young or just in life, you're at that point where you're now earning more than the bills you have and you're comfortable. Right, like you have enough money to put away in savings, you contribute to retirement, and you still have some cash left over. And now you're thinking about, hey, I should have some things in place. I should have, some sort of asset protection. I would say, if you are looking over the next 12 to 24 months of either purchasing a home, or you have an existing portfolio outside of any retirement contribution, like if you have, that's going through the employer. So if you have a 403b, if you have a 401k, if you have a defined benefit plan, etc., but all of it
Mhm.
is going through your employer, I would say, if you have a secondary portfolio, right, like whether it's an IRA, whether you have a brokerage account, some other structured products just outside of an employer-based retirement plan, then those would be, it could be as simple as that, right? Like, you don't have to amass, millions of dollars. You don't have to amass this just kind of huge net worth to then begin thinking. But I would say, if you're within, like, if you're looking the next 12 to 24 months, purchasing a home, if you have a portfolio
Mhm.
um, outside of retirement and savings, if you have even 529 plans for your children, because those are assets that the state can go after. Um, those, uh,
Okay.
so even as little as that, I would say that that's a timeline where a conversation would be worthwhile.
Okay. The signal's chopping up a little bit. I don't know if it's on your end or my end, but I'm being mindful of it as we're talking here.
N- No worries. I think
Um,
there's a little bit of a delay on my end. It seems like maybe a couple
okay.
second delay, but we'll push through.
Yeah. Yeah. We'll push through. Um, there is this connotation of, which I love. It appeals to me as an entrepreneur. Um, own every what is it? Let's say
Yeah, the own
own
nothing,
everything,
control everything. The thing that Rockefellers
own
have
nothing,
never
control
said.
everything. Yeah.
The marketing hype.
Um, yeah. Um, yeah. Speak to that a little bit. There's a movie scene that sometimes comes around on the internet that I just love. It definitely appeals to my interest.
Hmm?
The grandfather is talking to the grandson about his oil company, and
Okay.
and the grandfather was telling his son, "I'm pretty much on welfare at this point, but
Hmm.
this is why I'm broke, but the company is rich." And so he puts out on a piece of paper. He shows the son piece by piece here, that the oil company sends the money to the gas company, and the gas company goes this and this. He shows a circular thing where the money is art, where the money on paper, that the company is making no money on paper.
Right.
Are you familiar with this whole adage that you
So
familiar
I'm
with what I'm
familiar
getting
with
at?
the
Yeah.
the the adage, and like that as an actual concept. I don't
Okay.
the movie itself isn't ringing a bell, but uh, that structure that is
Yeah.
referring to, yes, deeply familiar. Those are some of the things that we do. Like, that's pretty, um like, it's almost standard, right?
Okay.
But I will speak to the marketing hype,
Okay.
because there's a lot. Like, one, let me just be clear: Rockefellers never said that a day in their life.
Please clarify
Uh,
that. Say that twice.
yeah,
Right.
the Rockefellers have never said own nothing, control everything. Why
Okay.
have they never said that? Because one is stupid. Uh, like, let me just be very blunt. And anybody repeating that, that already lets you know that they are they're not an expert on the concept of asset protection, let alone the idea, or even the Rockefellers themselves, because there's zero evidence that they said that. Now, the entity that is actually attributed to saying that is J.P. Morgan, which would
Okay.
make sense as it relates to the secret meeting on Jekyll Island,
Okay.
with the formation of the Federal Reserve,
Okay.
um, and which would make significantly more sense. And why would it make sense for the Rockefellers? Because the Rockefellers learned their lesson in the early 19th century, like the 20s and the 40s, especially
Hmm.
when Winthrop was challenged by the IRS, took it all the way up to the courts, and the court and control test was established as well. So in other words, this concept of, oh, I own nothing, but I'm going to control everything. Like, no, they wouldn't have said that, because both IRS and the court shut that down at this
Mm.
point 80 years ago.
Okay.
So,
Okay.
and then two, so one, when you understand that it comes from a falsehood, it's a myth, but it also equally speaks to the environment. And this is what I mean, right? Like, this is a prime example of what I talk about when I say asset protection. Because
Hmm.
imagine you listening to some Yahoo that's talking about, oh, own nothing, control everything. And it's like, okay, show me an example of how owning nothing and controlling everything works in practice.
Mm.
And their first is, oh, the Rockefellers. Oh, okay, so the 86 members of the Rockefeller family that's still walking planet Earth today, hey, they told you that, they showed you that. Because if you notice, everyone else but Rockefellers are saying that. Like, Rockefeller's still living. They've never in a day in their life, no Rockefeller has come out and be like, hey, here was the secret to our family
Right.
success. You notice they haven't said a doggone thing. It's everybody else that's spreading this for them. So it's like, okay, cool. Show me a prime example of how they've owned nothing and controlled everything. Just show me any other example. And one, they'll be extremely hard pressed.
Okay.
Two, it will never be even within the last 5 years.
But isn't that the
And
connotation of a
why?
trust? Isn't that the
So
connotation of a trust?
actually,
That,
no,
that's what they're referring
no.
to, right? No.
They're referring to it, but that's the marketing language. We have to separate the
Okay.
marketing, the hype, from the what is real. And that's
Okay.
my point.
Okay.
So a lot of folks running around on the internet, and some are even attorneys.
Yeah.
Some claim to be gurus and
Okay.
parrot the same, oh, the Rockefeller trust me, Rockefellers ain't never did that. They just
Okay.
did it. It's not a thing. Um, Now, what is accurate is what worked 10 years ago, what worked 40 years ago.
Hmm.
Have we had legislative changes in the last 3 years? Yes or no?
Oh, probably. I mean,
Yeah,
don't get me started. That's
absolutely.
way above my pay grade. Right.
Absolutely, right? Like, we
Right.
could almost assume that, right?
Right.
Have there been changes to IRS, like the Internal Revenue Code, the
Right.
actual code, not just the agency, but has there been changes to the Internal Revenue Code just in the last 3 years alone?
Right. You
Mm,
could argue that. Yeah. Absolutely.
yeah, there's been 63 changes since
Okay.
2024.
Okay.
All right. Now imagine you have a trust because you listen to one of these yahoos talking about own nothing and control everything, and you got a trust from them 4 years ago, 5 years ago. Meanwhile, that trust did not consider 2025. Well, what's so impactful about 2025? Because HR1, which was the big beautiful bill, HR1 was the most sweeping piece of legislation that we've had since the New Deal. So you walking around with a trust that believes the world is not changing,
Mm.
because what is written in that agreement stops time and assumes that the world will remain exactly as it was when it was written. The only
Yeah.
time that that agreement becomes active is once you die. And that goes for even irrevocable trust.
So
Why
does that
is
mean
that? Because the
just pause
vast
right
go
there.
ahead. Mhm.
Does that mean the trust has to be updated?
So this is where the distinction between estate planning and asset protection architecture make comes into play.
Okay.
Because if it's an estate plan, yes, that estate plan may need to be scrapped, and it may need to start all over. You may need to
Interesting.
rewrite the entire because there have been so many changes. That document and that agreement is effectively null and void
What a
until
rat
you
race.
die.
What a rat race
And
though.
most people don't
Yeah.
realize that. So when I say asset protection systems must be three things:
Mm,
audit proof, court proof, and adaptable. And what do I mean by adaptable?
okay.
That means that the system must be able to adapt to regulatory changes, policy changes, codification, statutory changes in interpretation and treatment without having to redo the entire system. That's what true asset protection is.
Okay.
If I have to scrap and redo it, just like for example, if I'm still operating, um like if I'm still operating a cobalt on my computer, like my operating system is still operating on cobalt,
Hmm.
was written in cobalt, and I have this operating system from 30 years ago. How protected is my computer going to be, even if I
Hmm.
put some, antivirus on it? It's like, no, man, you need to update the computer. It's
Okay.
like you need to upgrade the operating system. So that means I got to scrap the whole operating system, or I
Okay.
got to constantly build on top and take this old thing that was never meant to be modified to meet the standards that it
Okay.
couldn't have known 20 years when it was being written the first time.
Okay.
And so that's kind of what
Okay.
you're
So
up
so so I,
against.
so I get an asset protection program from you. It needs to be updated at some point, correct?
So we build so it is adaptable.
Okay.
Yep. So it is adapt. So we build so that yes, it can be modified. In other words, like it can be
yeah.
modified in
How?
order to meet what. So whether it's 5 years, 10
Okay.
years, in 2015, you
Okay.
didn't know that in 2025 HR1 would happen. You didn't know that
Okay.
63 changes would have been made to the IRC
How often
code.
should it be modified? It's great. You know.
So asset protection is proactive. Like this is why it's not just right. Like you have to be able to look down the field. You as an individual, you may not have that expertise. But in
Okay.
other words, and even for the people that's like, oh well, my trustee. Well, how well adept is your trustee? Is your trustee looking down the field?
Okay.
Is your trustee understanding how each of these systems are actively being changed and what they need to do to coordinate with the accountant, with the CPA, with the
Okay.
attorney, with the wealth manager, with the financial advisor, with the insurance agent?
This all sounds
That's
expensive.
asset protection.
This all
But
sounds expensive.
this
Like,
is why
yeah,
those that have it, and here's kind of the catch 22.
yeah.
Those that are living below the poverty line, like even in terms of asset, not just on paper, right?
Hmm.
But those that are living below the poverty line, they don't have anything to go after. They're already
Right.
living below the poverty line.
Right.
Those that are at the top, so whether you want to label them the elites,
Mm.
the high net worth individuals, ultra high net worth individuals, etc. They have the assets, but they also have the financial wherewithal and resources to be able to build systems of insulation. All right.
So
So
this
who
is
does
not,
that
yeah.
leave? Who
So
does
this,
that leave that has some assets but not enough to be able to protect those
right
assets?
there
Oh,
you go. So
the middle.
okay,
And so that's exactly what you're speaking to. And so that's what we do is we bring the systems that allow high net worth, ultra high net worth individuals to insulate themselves, and we make it attainable, at least more attainable. I'll say that because that's still relational, more
okay,
attainable for those in the middle. But
okay,
I would never describe it as cheap. So you're right about that. Like it's not cheap. It's never going to be cheap because in order to have the systems, the folks in place to operate said system,
mhm,
yeah, it's not it's not cheap. But do I need to
okay,
be Jeff Bezos to do it? Do I need to be, on the Forbes 400 list? Do I need to even be worth 20 million, 50 million in order to have access to it? No. So it's more attainable, but it's not cheap.
yeah.
Hopefully that makes
I'm
sense.
we think, oh, I'm always thinking about the little man. I consider myself a little man. Hey, Vanessa, my church sister, chimed in on LinkedIn.
Oh,
I'm
perfect.
nice. Yeah, that's my church sister, I would say. Um, anyways, um, I'm thinking of the little man, like
Sure,
myself.
sure.
maybe this is more selfish than anything else, but
No
I would imagine
worries.
I would imagine I probably fit in a very strong category of the average American who's a little bit of a small entrepreneur. I think we're getting to that
Yeah.
era where a lot of people are launching into small entrepreneurship, and
Mhm.
everybody's making the income of roughly between 60 to I probably say the average income of entrepreneurs, from baseline is probably a solid entrepreneur that's doing their stuff is roughly probably between 60 to probably about 250 300
Yeah,
k.
that's about right.
That is about that range.
Yep.
Um, you know, um, for that person that's at the bottom of it, it doesn't seem as realistic. When does it get to a point where you should be considering it? Like, how much should you be making before you start considering? Um,
Yeah, so I would still peg and say not necessarily the income, but the
okay,
accumulation of assets, right?
okay,
Because the systems don't like unless you are well for the entrepreneur. Let me back up because for the entrepreneur, because there's a distinction between the high income or high earning W-2 versus
hmm,
the what you would really consider like middle income entrepreneur,
okay,
right? Like you can be a high
hmm,
earning W-2 and at 250,
right,
300K. But if you're
hmm,
a 250, 300K entrepreneur, that would like put you as squarely middle income entrepreneur, right?
okay,
And so for the W-2, like the high earning W-2 um,
okay,
uh, individual or family, like there isn't a system that can go in place that will protect your income because it's all predicated on your employer, right? Because
mm,
they need to keep you
right,
employed. So there's nothing that I can do, um, that's at least legally justifiable. Like I'm not Suge Knight. I'm not gonna hang your employer dangling from the from the balcony and be like, listen,
right,
you're gonna make sure that Larry keep his job. Like we were having this conversation again.
yes,
Although like I wouldn't
yeah,
mind, but like
right,
but to elucidate that point that there's no system that we can put in place that would force your employer to keep you employed and
hmm,
ultimately protect your income. But now, have I purchased a home? Have I bought a car? Have I set up
hmm,
maybe college plans for my children if I have children? But in other words, I purchase some assets, right? I may still be paying on these things, um, as well or financing these things, but I am on the hook for them and I still want to shield them. So I would say that it's really about, have I accumulated something,
Okay.
right? For the W-2 person, have I accumulated
Okay.
something where, yes, it can be taken, and I want to make sure that it is protected. Now, for my entrepreneur, since you do control your income to a degree, right?
Right.
You're still subject to your clients and customers, the market itself, all right?
Right.
So I can't, shug your customers and make sure that they keep buying from you, but can you put some things in place to at least protect the business itself, right?
Mhm.
Um, and and let me be clear, because that's another misnomer where you see a lot of people talking about, oh, just put your business in a trust. It's like, that's how you know they're amateurs. Like, literally, that's one of the
Yeah.
biggest red flags.
How about
It's like,
I'm gonna segue. Let me segue.
yep,
I want you to speak to this a little bit.
yep,
Now,
go ahead.
there's an entrepreneur out here. We're not trying to stir no conflict, but I really like him. First of all,
Okay,
I really like them. Maybe I should say them.
sure.
They talk about the structure of putting things in an LLC or putting things in a corporation, and then putting a corporation under a holding company and a holding company under a trust.
Hmm.
I'm not trying to stir no drama, but to I do want to educate the public.
Sure.
Now, when I took my when I went to an accountant probably about, I'll tell you about personal experience. I went to an accountant
Sure.
probably about 2 years ago, and they were like, "Why are you doing all that for your business?" So it's like, why don't you just? They were saying, why don't you just put everything in a trust? Why do you have to establish it like this? Because trust does the exact same protection as putting it in a corporation. Like, you don't need to have all these corporations in order to protect your income. So explain. Both of them are not right. First of all, I know both of them are
Mhm.
not right. So tell me, explain, please
Sure.
explain the in between this. Yeah. Now when I'm talking about this, for those, oh my goodness, can you hear me?
I think we're did uh did I freeze? I think you're if you can hear me, Larry, I don't know if I'm still moving on yours
Can you hear me?
or oh,
Hold
I
on
can
a
hear you
sec.
now. You came back.
You can hear
You
me?
just came back. Yep, yep,
Yeah.
you just came back.
This. I'm gonna be dead in the water. My stuff does this all the time. Only as I use this platform, I'm gonna have to get a new laptop. Oh, this sucks.
No,
Uh,
no worries.
so so
Um,
so
go ahead.
I might cut out, but just while we're in this feed here, like explain it a little bit, like, you know, and what we're talking about here is we're talking about LLC, we're talking about sole proprietorship, LLCs, corporations, and holding companies and their attachment to a trust. Like, is there
Right.
legitimacy in having a structure like that?
There can be legitimacy in it, right?
Okay,
But let me be very clear is that I there aren't well, let me kind of back up for a moment, because
okay,
even this concept of the way that it's communicated, oh, the trust will own the businesses. It's like,
right,
one, it matters the type of trust,
hmm,
because the way that a trust owns a business, you're not operating the business through the trust. And
right,
the trust actually, there's a such concept that is well established within the Internal Revenue Code and Department of Treasury, um, of having unnecessary
hmm,
business interests. All right.
okay,
So depending on the intention of that trust, depending on the scope of that trust, a trust is not going to own the business. What it's going to own is the membership units if it's an LLC. If you're a sole, like a purely sole proprietor, so in other words, you are participating in commercial activity, but you are not a business. Like, that's not a
hmm,
being a sole proprietor. And a not so fun fact, like 74 to 76% of new businesses are sole proprietors. Why I air quote, because you're not a business. What you are is a social security number hand waving in front of the IRS saying, hey, I got some commercial activity here that I want you to acknowledge, and I want you to charge me full boat for taxation. Like that's
Right.
all you're doing as a sole proprietor. That's why you
Right.
can't raise capital. That's why you can't qualify for loans. That's why you can't even hire employees. Why? Because because you are a social security number. Nothing more,
Okay.
nothing less. So it's like first identifying, well, which corporate structures, whether that is an LLC, whether that's a variation of a C corp,
Mhm.
whether it's for profit, not for profit, whether it's a partnership, LLP, whether it's a closely held corporation, whether it's a professional services company. All of these are essentially categories of companies that are recognized at the state level. Um, and so the trust itself will own either the membership units of the LLC or it will
Mhm.
own the shares of the C corp, right?
Right.
So it's like first we have to understand, how does a trust, or like what is the relationship between the trust and the corporate entity? This
Mhm.
is what I mean even when I talk about asset protection, because it's
Mhm.
not like somebody could sell you like, okay, I'll give you a trust, I'll give you an LLC, I give you a C corp, and we'll just make one of the holding company and the other one the operating company, and like we've segregated the assets. But don't mistake asset segregation for asset protection. It's not the same
Mhm.
thing,
Mhm.
right? So
So if
even
my
under
stuff is in a holding company and
mhm,
it's separate from my company, right? I have an operating company, I have a holding company.
yep,
My holding company can still be held liable. Yes.
all day long.
Oh my goodness.
like this is what I mean. Like people think like, oh, because it's in the holding company, the holding company, like you can't go after the holding company. Like, are you okay? Like, are y'all like I want to be like, are y'all dumb? It's
Don't say that.
like,
Don't say it.
like
I'm gonna edit that one out there.
right, like
It's dumb.
yeah,
Just putting things in a holding company does not protect your assets, and that's a
right,
very
because
strong
it
and bold
is
statement. It can
right,
hide
like
your assets,
it segregates your
sec-
assets.
but it can hide it though, right? Because if nobody knows that I own the
No,
company, no.
no,
Speak to
no.
that. Okay,
There
that's
is
just my
no such in
naivety.
2026, and not just in 2026, but for the past decade. This
Okay,
idea of, oh, I'm going to be invisible and I'm hiding. And
now
this
don't
is what I'm
happen.
talking about when I talk about asset
Yeah,
protection. You would have had to have that comment like, could you hide assets? Could you be an invisible private citizen? Before 2012, yes, that was
right.
true.
You could at one
What
point. Okay.
happened in 2012? If you remember, that was the Obama administration. Well,
Hmm.
who was the attorney general? It was Eric Holder. When Eric Holder broke Swiss banking secrecy laws, the
Ooh.
concept of hiding and being invisible, and so all these folks running around talking about the, well, you can hide assets, you can be invisible. That already lets you know, run.
Okay.
Because asset protection is not about hiding. Asset protection is about remaining within a compliance standard that I don't have to hide.
Right.
Even if you're coming after my assets, I can tell you exactly where it is and you still can't touch it.
Boom. Mic drop.
I don't have to hide a dang thing. I'm a man. Like in other words, stand on your 2 feet.
Right.
Like, like if a government entity is coming after me and it's it's almost like being a child. Let me run and go hide my thing and let me lie.
Right.
Let me,
Right.
hey, hey, did you do that? Did you break that? Did you spill that glass? No, no, mama, I didn't know. Knowing you
Right.
did. Who does that? Our children do that. Right? The
Right.
children run. No, versus did you do that? Not only did I do it, I specifically did it to make sure that you can't touch it.
Yeah.
And it's like, oh, really? Yes. And if you don't like it, change the laws. If you don't like it, change the policies. If you don't like it, change
Right.
the regulation. And until
Right.
then guess what? Eat crow.
Right.
Because in other words, you have to understand the rules of the game. When you play by the rules, you don't have to hide. You can stand on your own 2 feet. you can stand and say, yes, emphatically, I did this to shield my assets so that you, as a government entity or a private entity, do not get the right to take what I have built. Full stop. I don't
Full
have
stop.
to, I don't have to obfuscate. I don't have to pretend. Because it's like, it's, anyway, we can spend a whole
No,
other hour
no,
on the ways
I
and
love it.
means
Look,
that
I love the masculine energy.
like, it's like, I'm like, and that's the
I'm a
thing.
man. I'm standing on business.
It's a You don't even realize that since September, nearly every system is unified. This is what I mean. Like, how many of these
Ooh,
folks that's running around on this internet talking about hiding stuff and being invisible ever since September?
mm,
Whether it's your license, like in other words, you're getting ready to cross a border, and they can see your tax returns.
God, dog.
When you apply your children for school, they can see, well, how many times you've left the country. We've been housing we've been housing DNA on record. Like, state of California, in fact, has a program where they can house your DNA from a traffic stop. That's been since 2016, 2017, roughly.
Hello.
Yep. Can you hear me,
Okay,
Larry?
I can hear you now.
Yeah.
My computer's
Yeah.
acting funky, so let me.
No worries. I
This
just kept
is
it.
like day two.
Yeah,
But
I just kept it going. But I was just saying that we are in a time and place where systems are unified. Uh, like the idea that a multi-billion-dollar company cannot get access to your social simply because you have a C corp. Like, I know there are some folks that believe, well, because I own a C corp and I apply for a loan and I didn't have to put my personal social security number down, so I don't, in the event that I don't pay it back, well, then it doesn't hit my personal record because it was through the company, and
mhm,
I get to walk away free and clear. It's
mhm,
like, again, are y'all okay? Because Enron was a C corp. You know, FTX was a C corp.
mhm.
Where's Jeffrey Skilling at again? Where's Sam Bankman-Fried again? Like, and FTX had about $250 billion.
Mm,
Hey, and so, like, people genuinely are thinking like, oh, well, I can kind of get away with stuff. I can hide stuff and
right.
not even like, you genuinely think multi-billion-dollar companies don't have access to resources to be able to get so granular. They can tell you the last time that you liked something on your personal phone,
Mm,
your iPad. But because you didn't put your social security number down on the loan, oh, well, if that loan defaults, then, it's not going to hit my personal credit. They can't touch me. Okay, keep thinking that.
right.
Keep thinking that.
Yeah.
Like, and this is what I mean, that true asset protection understands those systems.
Yeah.
They understand how the C corp is related to the trust and how to operate the trust, how to operate the actual companies as well. Asset protection is not just about having the structures in place, it is about operating the various entities within a compliance framework. So
Okay.
that way, when challenges come, not if, when they come, because they are going to come, you're not leaving the doors open. You're not leaving the windows open. You've built a structure that can withstand an audit. It can withstand a court challenge. It can withstand changes to a regulatory environment, to a statutory environment, because that
Mhm.
system is what? Adaptable.
Yeah. This term
So hopefully
adaptable.
now
Yeah.
all of that makes sense. I know it's a
Yeah.
very long-winded way, but yeah.
No, I like I said, I I appreciate this is like the introduction to hopefully future conversations because this is only unpacking one aspect of who you are. I really want to tap into the Black history part of you because you was blowing my mind.
Yeah.
You was blowing my mind the last time I talked with you. I was like, man, you know the way you were talking. I'm like, this guy is a walking history book here. So, um, I hope that the audience is able to see that part of you as it relates to me presenting you at least on my podcast. So,
Hey, I
um,
look forward to it.
yeah,
For
man.
sure.
So I got to shift gears here. I got to go pick up my daughter. But and I'm pretty sure I know you got kids at home too. We was laughing about this the last time.
Yeah, yep,
You know, daddy woes. So
yep.
uh, I think you're like your daughter was sick. You were trying to get her to hurry up and take the medicine. Was that?
Yeah, that's right. That's right. Oh man, you know how that goes.
Yeah, man. Yeah, I think my daughter was sick at the exact same time. I think that was the time my daughter was
That's
sitting on my
right.
lap.
I think you were. Yeah, I think we were both going through that
Yeah.
challenge. Yeah.
Yeah. So, well, anyways, it's good having you. I've got my computer malfunction, but hopefully I problem solve them the next time we talk. But we'll stay in network. I got you in the loop here, so we'll just keep plugging away.
Absolutely.
Yeah. Thank you for being on the podcast and presenting, and just being able to talk thoroughly about your expertise, which is a beautiful thing. Beautiful thing to see a black male, fellow black male, talk passionately about his craft. So, with that being said, let people know where they can find you at. Like if people are interested in setting up an asset protection system, you know, to help protect their what they build in their lives and pass it on to the next generation. How do they reach out to you?
Yeah, absolutely. A couple of different ways they can go directly to the company site, which is rather long, legacyprofessionaltrustees.com. They
Okay.
can either go there or they can check me out on social media. Primary social media is TikTok.
Okay.
So they can go right to my name, Errol Devon.
Hmm.
Um, Trust Professional on TikTok. They can go to the link in my bio,
Hmm.
and they can set up a consultation, and just have an easy just conversation to figure out, are they a good fit, um, and just kind of really take it from there,
Okay.
but usually walk away with some actionable information, we whether there's alignment there with us. I always make sure that anyone that engages with us walks away with something actionable that they can do, um, as well. So yeah,
Okay.
those are the two ways.
Yeah, it's side recommendation. We're gonna find a way to shorten your or get a different domain name or another domain name.
Legacy Professional
Like, what did you
Trustees.
say?
I know, yeah, Legacy Professional Trustees.
Oh, we're gonna
.com.
shorten that a
Yeah,
little, but
yeah, I
I'm
know.
gonna work with you on that one there. I used to get advice from somebody when I was starting out when I was like refining my business. I was consulting with a business advisor, and
Yeah,
he told me, Larry, he's like, shorten your domain name because you want to make it of ease for somebody to type
for people
in
to remember.
that's what well
Yeah,
remember,
I
but
know.
also to type. So
Yeah.
um just FYI, I'm just passing it on from next person to the
No,
other.
I
So
appreciate it.
uh,
It is something that um I'm considering.
yeah, but you
So
don't have to get rid of
who
that
knows?
one. You don't
No,
have to get
we
rid
will
of it.
still keep it, but
Yeah,
who
just,
knows, by
yeah,
next time we come on, we might have a shortened a shortened variation that will
yeah.
still take people
Mm,
to
right,
to the original site.
right.
So yeah, but yeah,
Okay,
I'm aware, because when I
okay.
first started kind of writing it down, I was like, oh, but it was like I felt like it was too late because all the marketing, you know what I
Yeah,
mean? Like everything was already
yeah.
like Legacy Professional Trust.
You already got on the flyers, right?
Right, right. Like it's already like the emails and said like everything was already
No,
like
yeah. It's not like you know what
right.
you do. You know what you do that you just get another domain name and you forward it
Yeah.
to them,
Yeah.
but
Yeah.
you
That's
keep the other
what
one. Yeah.
that's what
Okay.
I'm
Okay.
thinking about doing,
Yeah.
is because even the team is like, hey, can we I'm like, yeah, we'll
It
narrow
was
it down.
you,
Um
you say it was jumping off when I first started.
Right, right. Yeah. So it's but yeah, we're at that point.
Okay, all right,
We're at
cool
that
beans.
point.
All right, well,
All right, brother.
I'll talk to you next time, man. We'll stay in contact. All right,
Absolutely. Take
all
care.
right, all right. Take care. Bye now. Let's see if I can successfully get up out of here. Let's see. Yeah, I can successfully get up out of here. Thank God. All right. Thank you for those who are watching the podcast stream here. You guys have a great day. God bless.